Good afternoon, all. On behalf of India FinTech Forum, I welcome you all to the online session on credit laws and fraud prevention in the digital age. Are Fintechs prepared? This webinar is supported by JuicyScore. So a few points to note before we start with the webinar. The attendees can enter their name and then post their questions under Ask a Question panel. The questions will be taken towards the end of the session. And this webinar will be recorded and it will be published on India FinTech Forum's YouTube channel. It is my pleasure to introduce the speakers and moderator for the session. I warmly welcome Mr. Mikhail Marchenko, co-founder at JuicyScore, Mr. Sabyasachi Goswami, Chief Business Officer at Perfios, Mr. Ashok Hariharan, CEO at IDfy, Ms. Amrita Sarma, Chief Risk Officer at Axio, formerly Capital Float, Mr. Vimal Saboo, Member of FACE and Chief Business Officer at EarlySalary. And the moderator for today's session is Mr. Manish Thakwani, Regional Head of Business Development at JuicyScore. With that, I invite Mr. Mikhail to give the presentation and take the conversation forward.
Perfect. Can you see my screen now?
Yes, we can see that.
Good. So I will try to do it really quickly, not to take too much time from other speakers. So what I can tell you about JuicyScore. So we've set up our company 6 years ago with the goal to create technologies for fraud prevention and risk analysis. Our first clients were from unsecured lending industry, but now 6 years later, we serve clients from various industries. Still, most of them are from lending space, but we help different companies from kind of old-fashioned commercial banks to the new generation companies like BNPLs and similar services. We also help companies from insurance, gaming, and classified space. So we have right now clients in 30 countries from Philippines to Mexico, but I was really impressed by India when I did my research and we've decided to enter that country. On one side, it's a huge 150 billion USD market with extremely high fintech adoption. But on another hand, kind of how many 1.5 million online fraud cases were reported last year. I don't know how many cases was not reported, but anyway, JuicyScore technologies can help a lot to reduce that number. So what we do, basically we analyze online 50,000 data points and calculate 200 predictors, which is possible to divide on several groups. It's behavioral data, it's internet connection data, it's device data, and device software data. And there are a few things which are important about our solution, which is different to other solutions we have on the market. You can find on the market. So what we do, we create a very stable device ID, which minimize simultaneously type 1 and type 2 errors. We have a set of technologies which can help to detect randomization and virtualization, and on top of that, we do it absolutely without any use of personal data. So we're GDPR compliant everywhere in the world, and I do believe in India it's a very important topic right now. So we will discuss it more during the webinar. Sorry. So what we can do besides anti-fraud scoring, we provide an alternative data for credit scoring as well. To name a few, it's behavioral markers, device markers, connection markers, On top of that, we have variables which can help to identify device quality or even estimate income of the virtual user. So how it works? In order to implement our solution, it's needed to install our JavaScript or SDK into mobile app or website. So we support both channels to do that. After that, our script generates session ID, which is a key for our API. And kind of the last step is to call our API, where we use that session ID and we return 200 data providers as our API response. This is kind of the last slide. I just want to illustrate how our clients usually use JuicyScore. So usually we are in the beginning of the decision-making process, and we filter out high-risk application from the incoming flow of applications, which is approximately 20% of total number of applications our client receives. And the reason for that is very simple. So we don't need personal data to do it. Therefore, it's possible to use us from the very beginning. And we help to save costs on services used on subsequent steps, which are kind of usually more expensive than our service. So this is kind of the best practice from our clients. That's basically it for the initial presentation. I will pass the word to Manish.
Thank you, Mikhail, for the presentation. First of all, I think I'd like to start by thanking India FinTech Forum for setting up this event with some industry experts from the fintech space. And I would like to take this opportunity to maybe take this conversation forward around the main topic of discussion today, which is credit loss and fraud prevention, specifically for fintechs. Now, maybe to begin the conversation, everyone, so I'd like to maybe touch upon when we talk about fintechs, what is the one thing which sort of comes into our mind? I think there are 2-3 major things which comes into our mind, which is maybe digitization, speed, convenience, right? So these are some of the things which we sort of think about when we talk about fintech. And I've always believed that technology is something which can solve real world problems. And fintech is here to solve one of those big problems, which is getting financial services to each and every person across the globe, right? So that's a major thing which fintech is here to do. However, I'd like to also sort of highlight that when we talk about fintech, and what are we talking about? We are talking about combining technology with finance. And I always believe that technology is something which is something which is similar to a weapon, right? It can be used for good purposes, it can be used for bad purposes. So here we are discussing about essentially what are those bad aspects which we need to take care of, which the fintech industry should be sort of aware of to sort of understand the risk involved, and it works both ways. That when we talk about fintech industry, what are we talking about? We are talking about maybe customers getting access to maybe a loan anywhere he wants to, and in a matter of quick seconds, or maybe he wants to open a bank account, he can do that in a few seconds. So all of these services, or maybe he wants to buy an insurance policy, he can do that with a click of a button, right? All those things. But yes, it does come up with its own challenges. One example here is, of course, when we talk about UPI, like UPI, when it came in 2016, it came in as a boon for the payment industry in India. And if you think of it right now, what I just reading the statistics that last month there was approximately 500 crore transaction valuing more than 10,000 crores. That's a huge number. But on the other side, there are risks. There are bad actors who try to sort of fleece users and then do fraud. And fintech is sort of not left behind. Fintech industry is also something which faces a similar sort of thing. So maybe with that, I'd like to take a perspective from maybe starting with maybe Vimal sir. So he's one of the stalwarts in the fintech industry. He's also worked with traditional banks in the risk space, and also basically setting up all the credit risk engines and everything at the banking industry. And subsequently, he's also been more than half a decade involved with EarlySalary as well, which is one of the largest fintechs in India now. So maybe if you could share some of your examples, what you have seen, what's happening in the fintech space in terms of, fraud, which we have seen, or the elements which we be aware of, so that we should prevent these bad actors from getting onboarded and doing some sort of fraud. And so I think we'll start with Satya on that.
Yeah. Okay. Good afternoon, everyone, and thanks, Manish, for the introduction. So I mean to say, see, the fraud is one element which has been there as for, I mean to say, for decades, right? So since the the lending industry started, specifically it is more prevalent in the lending industry. I'm to say it is also it's also there in the entire banking ecosystem, but primarily in the lending industry, people try to do two types of fraud, right? Maybe probably I'll just summarize for everyone. So that one is the income document fraud, where let's assume I don't earn anything, but I want to say that I earn 50,000 rupees, and so that is one type of fraud. And second is the identity fraud, right? So where I temper my the KYC document or a lot of these documents which are required to process an application or to process a loan or the banking account, right? So there are in last 5-7 years after the digitization has happened, specifically when the fintech has come in, and so more and more customers are going to the digital way of getting the loan, right? So and that's where there is no physical connect between the customer and the loan provider. That's where the one more challenge comes, saying that I don't know the person, I have never met the person, but I still have to assess the customers. So that adds to the existing maybe probably decade old problem. But at the same time, in India, in last after a lot of regulatory things which has come in, like Aadhar is one, wherein the that adds a lot of security from the lender point of view, from the bank's point of view. Aadhar, then a lot of this digitization of the documents which is available as a KYC document. Even the bank statements, now there are a lot of services being made available by Perfios and by a lot of other fintech other partners. So these are again which adds a lot of I mean to say triggers in terms of whether there is an application or there is a customer who is trying to make a fraud. So I'm to say, to summarize this, I think so. This is one which has been there for decades, and there were physical ways of doing it earlier. Now we have a lot of digital way of doing it. That there are publicly, data available. Not the publicly, but I'm to say there are a lot of APIs which has been exposed by the government government departments, and the banks also are like account aggregator is one of the documents means the way of reducing the fraud risk, right? So that is what I would say that the ecosystem is looking like as of now.
So absolutely, the valid point there. So with that, I think to continue the conversation forward, like so when we actually talk about fraud, we actually it's worked very similar to the aviation industry, right? You must see that in an aviation industry, when you see a plane crash, when you get to learn that okay, what went wrong, and then you try to understand what went wrong, and then the next change, there's an implementation which happens so that this particular reason is not the one for that particular crash, right? Similarly, in fraud, what happens is that fraudsters are always sort of on top of, I'd say, they sit on top of the funnel and they try to sort of misuse any sort of small leakage which could be there in terms of controls which is built, right? So maybe with that, I like to take a perspective from Amrita, like, because with the Axio, formerly Capital Float, so you guys work in the BNPL space. So BNPL is, I would say, much more quicker than a digital lender, right? So you might offer your product at a checkout finance stage where, let's just say I want to buy something online, and suddenly I'm presented with the payment option of Axio or maybe companies like Simple, LazyPay. There are so many options available, right, for me as a customer. So, but how do you sort of understand, okay, who you are offering this customer a credit line? How do you ensure that this guy doesn't default or doesn't turn out to be a fraudster? So, like maybe if you can share some experiences or some controls which you have maybe sort of built at your end.
Absolutely. I think, firstly, thanks, Manish, for the introduction, and hi, everyone. I'd like to just go back to your aviation industry example and say, in lending, the plane crashes like 3 months later, right? Or 2 months later. Like, that's the other difference with lending. But just going back to I think even the points that Vimal sir made, right? Which is conceptually, especially as a lender, right? There are two types of risk. One is the first party risk, which is the person that is actually availing the loan, whether or not they can actually service the loan. That I think is almost the cost of doing business when you're doing lending, right? And that's where, underwriting models, different proprietary data sources that different lenders have, that's where that plays in. I think the second form, which again, Vimal has referred to, is third party fraud, where essentially there is another person that is trying to take your identity and defraud the system essentially. I think just from an axio, formerly capital, like you said, perspective, our business model allows us to some extent be insulated from some of this, because conceptually, while we do offer consumer checkout finance at the point of sale, so to speak, the way that we do it is we integrate with large merchants, right? Like large partners. Amazon, for instance, is one of our large partners. The reason that I'm saying that our business model allows us to be to a certain extent insulated is because of our relationships with the merchants that we integrate with, we have two large advantages, right? One, the merchant obviously wants to make it work as a win-win situation. And so there are certain pre-filtering that the merchant does on their existing customers because they've already run through that cycle, right? So that's the first one. The second one is that, we often co-create proprietary models, proprietary scores. Again, obviously not using any customer personal information, that allow us to, again, figure out if there are people that are breaking through beyond the filters that the merchants already apply. That being said, like I won't say, obviously, like I think the ecosystem is facing fraud to a certain extent. And again, like Vimal said, and like you said as well, Manish, fraudsters are in general, like they have 100% of their time to just sit and figure out how to defraud the system. At some level, we're always going to be a step or two behind. And so it's really a lot about how do you put the right checks in terms of things like velocity, things like anything that is looking suspicious, any repeats of information that you're seeing that are really the ticket, right? Again, like obviously, like as many of you guys know, there are different instances that the ecosystem has seen over the last little while, right? For instance, one large one appears to be cases where the third party is essentially able to circumvent even the type of Aadhar-based checks that Vimal sir was referencing by social engineering and getting the OTPs that UID is sending, right? Like that seems to be one problem that other players are facing. There is another broad problem where the fraudsters have access to a bunch of information of, say, PAN, right? And they're applying with names that are very similar to the PAN and going through, right? So these are two of the large issues that I've heard in the recent past that I figured I would just share with the group and surface.
I think it's pretty interesting and pretty interesting perspective there. And I'd like to take a cue from there, like you mentioned about certain aspect around, like you already do a pre-filtration of certain customers, and then basically you already know that okay, this customer may be good, so can be offered that particular product at the stage of checkout or something like that. But again, I like to sort of touch upon what Vimal sir also said, and then you also said third-party fraud in combination with identity theft, right? Just because you have validated that this guy, maybe this mobile number is okay to sort of this one, but how do you know it's the same guy who's coming in to avail that facility or not? And with that, I think I like to take a perspective from Ashok and then Sabya, because Ashok has and both Sabya are in this industry where they provide all these services, which also basically help to prevent this fraud to the minimal extent. So maybe Ashok, you can come in there in terms of like in terms of identity theft, third-party fraud, and what all can we do? I mean, you can also share examples of what you have seen in the whole industry, because you have a whole industry perspective, and then maybe talk to a little bit of controls as well, which are sort of put in place as well.
Before I start, let me just I like to put a little bit of structure on my own what I'm going to say, and the way I look at fraud is there are four things, right? Like it's one, does Ashok Hariharan exist, right? People create identities out of thin air as well. So first step is does he exist? Second, is he the one doing the transaction? Has he committed fraud in the past? Is he likely to commit fraud in the future? Right? Like I would put, like, let me talk about those four aspects first, right? Now, does he exist is easy because it comes from the database. Great, right? Because as long as I know that there's an Aadhar number and a name, I know that this person is there in the system somehow. Now this, but the second problem is a little tougher, right? Because now he exists, but I might pretend to be, or you might pretend to be me. And here's where you want to make sure that, like, has the documents been tampered with? Is it the same guy? So you do face match, you figure out liveness, because like I've noticed in a lot of our cases, especially the fraudsters, what we've seen is they go to your Facebook profile, take a photo, because these are all automated platforms, right? So the way to game it is to actually go to your Facebook profile, pick up your photo from there. They have a photo of my ID card because some KYC, physical KYC happened, and that runner has, by the way, the system works like this, right? Like runners go out, get their KYC documents, and then because they did it for some credit card company, and physical becomes a channel for actually fraud. We think that physical is a lot more secure, but it isn't, because there's a leakage where the last mile guy is actually selling this selling these fake documents for 500 rupees to a fraudster who then tries to game a system. Now, exactly like what Amrita said, the fraudsters' day job is to do this. So they'll go pick up like 10,000 documents. All they need to do is get one right? And then you're defrauding the system. So all we can do is put checks and balances at different stages. So second part is actually, can you get your face match? Can you do your liveness detection to make sure that this is the same person or not? There might be other ways around using device, like what JuicyScore does, is device and biometrics, etc., to kind of figure out, is this a person who is the same guy? The third aspect is, has he committed fraud in the past? This one, while people think that it might be hard, it's actually, there's data available, right? Like there's court data, which, for example, IDfy has mined court records. So now we can actually check if there's a court case against this person, a police record against this person. This is government databases available for research, or where like we are working with some of the banks where we have known fraudsters list. So we can then do a 1:n face match to figure out if this is a known fraudster or not, right? Then finally, you get to the last stage, which is what is the likelihood of fraud in the future. And here, this is where the fraudsters are getting smarter. This is where synthetic identity comes into play. They'll literally be good behavior guys for like 2 years, build their score. You'll see these guys with with scores of over 800, and then suddenly overnight they disappear, right? And this is happening in India. It used to happen a lot in the US, and we know about it. But in India, this is now starting, right? Because of obviously the propagation of digital technology. So I would like to kind of look at this problem kind of in these four aspects, because if you structure it, then you can actually solve the problem almost like on an ongoing basis. Now I'll take an example with one of the banks that we work with. We obviously do video KYC, and we noticed we can't see the data obviously because it's the bank's data, but we noticed the metadata telling us that the same profile ID came 12 times and got rejected. When we talked to this bank, we said, hey, can we see this data by any chance? And then we started looking at it, and we realized this is a person who's coming in with literally different ID cards of different people. Like it was literally Jamtara fraud. I don't know how many people have seen Jamtara, the show. There's a person coming in with 12 people's ID cards, and he's trying to fake the system by showing his face and seeing hopefully the face match will match with somebody, right? Again, this guy is trying it every hour. Now, this is what they do. They just need to get it right once. They don't need to get it right every time, right? And I think that's where we have to kind of think about it a lot more meaningfully, because the fact that he came 12 times means that the first time when he got rejected, that should have gone into a fraudster DB of sorts. So the next time he comes in, you don't compare against the card anymore. You compare against the existing fraudster list, and then you know that, hey, this guy clearly is a fraudster. So I think we'll have to start looking at this problem a lot deeper than what maybe the industry has been doing till now, because the fraudsters are getting smarter.
Absolutely. So I think that's a great perspective there, and especially the example which you gave around stepwise, like each and every. I mean, the fraud you should be looked at, and I myself believe that fraud is a sort of a puzzle, right? If you put 5 things in a puzzle, and then all those 5 things sort of come in together, then only a fraud can happen. So if you're even able to stop one piece of the puzzle to be stopped, then the fraud can be sort of stopped. So the idea is to look at everything holistically, and that's what we believe at JuicyScore as well. Like we look at every piece of data, and then we crunch it, and then analyze it, and come up with a conclusion. With that, I think I'll also try to take a perspective from Sabya, because Perfios, we know. I mean, I don't know anyone who's not been aware of Perfios. So we've been there. Perfios has been working in every sort of bank. So I'd like to take a fresh perspective from maybe Sabya as well. Like, what are the current scenario that you've seen specifically, maybe in the fintech space, or also you can move on to maybe banks as well, and then we can talk about the various controls which have been sort of in place also, right? Or maybe can be built in the future, which may be in the works as well.
Sure. Thanks, Manish. And hi, everyone. So I think everybody made very valid points, Vimal, Ashok, Amrita. So most of the points regarding fraud has been made, but I think some statistics needs to be spoken about, which is mind-boggling. And the reason I'll speak about those stats is even despite knowing that stats, we are not doing enough. So India loses about 100 crores daily in frauds. And we have been losing that amount for the last 7 years. Despite that, I don't think whether they spend on the awareness, technology, processes, we spend enough as the ecosystem, despite this challenge. And we ourselves are to be blamed for each other there, that if this is such a significant problem, then why institutions don't want to spend enough dollars building what is required. Yes, I mean, the fraudsters outsmarts the technology or the credit models or the scores that we build. But if we have to outsmart them, there has to be enough investment on the research, and it has to happen right away. I think there are companies, I think 3 of us are here, JuicyScore, IDfy, Perfios, all are trying to build something or the other basis the intelligence that we get. But yes, I mean, I think as an industry, nobody is willing to participate wholeheartedly to contribute to an ecosystem to survive and thrive. So the point is, it is my data, why should I give, why should I share? That's a common phenomenon. And it's high time that everyone admits and comes together if we have to evade fraud. I think that's the first and foremost, because it is not necessary if somebody has done a fraud in X institution, will not try an attempt in Y institution tomorrow. So the first point is the data needs to be real time traveling to the Y and the Z institution so that they don't take a hit. So it is a participative approach, cannot be solved on a standalone basis, just basis technology. The reason I make that statement is for the last 7 years, we have tried multiple things. We have continuously have a huge team which works on only a fraud modeling. Can I prevent 100% fraud? I would lie to myself and to the entire community if I say, yes, I can do it. No, that's not possible, right? Because there are new trends that evolve every day. And the new trends are not just what Ashok said, synthetic fraud. Vimal said about identity and document tampering fraud. there are behavioral trends as well, which is the fourth point of Ashok, that it is not that you may see that somebody's score is 750 or 800 plus in bureau, fantastic repayment track for some of the things that you will analyze. But beyond that, there is a behavioral pattern which shows that he has a high tendency to commit fraud. But as an ecosystem, are the organizations ready to consider that point? Because what happens is, till the time that happens, as an organization also, we are not very open, because ultimately you are taking no to a good business at that point in time. Because the business guys, I mean, I have been on the business side, credit side, both. And as a business guy, I will say, what are you doing? I mean, you are saying no to a good business. Because what you are saying is you are predicting the future basis some behaviors and saying that he will commit a fraud. So I think it's an overall shift in the way we think on either sides, on the technology, on the process and models that we build, and as an institution, as an FI, that yes, we need to kind of take a stand and kind of do away with some of those things and not take the appropriate risk which can be avoided. So I think that's something which is clear that we see. And one more thing that which actually happened and increased more in 2021, and I live in Bombay, so at least some stats of Mumbai, maybe people joining from other parts of country, please pardon me for that, I don't have the stats for across India. But just on credit cards, there was about 1,075 frauds being registered in different police stations of Mumbai. Out of that, only 48 cases were cracked. And in a particular month in January, there were about 100 plus cases were registered, and none got solved till today. So what I'm trying to say is that post facto, you hardly can do anything. There has to be an approach which is, proactive, that what can be done with the help of all in the ecosystem and with the help of technology and some models that each of us bring to the table, and commit to it and take steps well before it and not reactive after the fraud has happened. So I think that's the biggest learning that we have seen. Of course, as the session progresses, maybe we'll touch upon some more points.
I think that's a pretty valid point in terms of data sharing. Like if one person knows that, yeah, this guy has committed a fraud, maybe one data point, why can't it be shared with the across the industry so that...
Manish, it happens. If you ask everyone, everybody will say it happens. Where? Mm-hmm. Nothing documented, informally. Yeah. I mean, I have been credit manager, I have seen. So one credit manager before sanctioning will talk to the other credit manager. No, that's an informal process. That's not documented. That's not a formal process. By tune loan diya tha, kuch hua hai kya? No, that's informal. So absolutely. I mean, when do we break out of this and make it something formal as an ecosystem?
Yeah, in fact, that's also something which we are trying to do. We are also trying to build some sort of a common set of information for devices being involved in such bad activities where information can be shared across. So I think with that, you made a very valid point. So with that, I'll also come back to the regulatory aspect, right? So I think when we talk about regulation, so as you know, so we work in the BFSI space, right? So in the BFSI space, when we can't do anything beyond regulation, right? So we are sort of bound by those. So I was just reading an article on LinkedIn where somebody asked someone that, what is a fintech afraid of, right? What are the 5 words fintech is afraid of? So someone said that RBI has come up with a new circular, right? So that's something which the fintechs are usually sort of scared of. So I won't get into the business model part of it because there are many regulations or circulars which are coming from RBI, which have sort of stopped people from going ahead with their business model. But I would like to focus on our point of discussion, which is credit laws and fraud prevention. How do we sort of remain in the because when we talk about regulations, we think of compliance, right? That's the first thing which comes into the picture. But I actually believe in the opposite way, where I think Ashok can agree to me in that regulation also sort of, it's actually necessity which brings that regulation, and regulation brings some sort of innovation. So classic example of that is that when in 2016, around that time, when Aadhar was had the OTP-based system, so everyone started using the OTP-based KYC. Then RBI realized that everyone is using it, telecom guys are using it, everyone using it, stopped it. And they only allowed banks to do it in somewhere in 2018 or something. And then subsequently we moved on. Then NBFCs were allowed to do offline Aadhar verification. And then in 2020, video KYC was allowed. And Ashok will agree to it that suddenly the demand sort of went up because everyone wanted to do video KYC. And the technology was, was starting stage, but it was a good thing which RBI sort of come up with their regulatory this thing, which spurred innovation and then subsequently moved in the right direction. But with that, I think I'll come to Vimal sir again. So I think because Vimal sir is also part of FACE, which is another organization which is a self-regulatory body which may be appointed by RBI to manage digital lending and fintechs in India. So sir, I want to take a perspective from you, like especially around the point which Sabya mentioned around what are the things which we're looking at in terms of to stay within the regulatory regime and then but still being able to do or something where we are able to identify such fraud incidents or maybe credit related risk early in the because especially in the segments which you guys work, right? There's a large segment which is an NTC, so you might not find much information on the bureau. You might not find information in the generic data sources. Of course, you can validate the guy if this guy is actually this guy or not through his Aadhar or PAN or all of that. But you still need to know his credit worthiness and all those things. So, I mean, if you could share some experiences on, first of all, the regulation, then what are we sort of doing in that space would be great to sort of learn there.
Yeah. Sure. So, see, like as I think so, Sabya mentioned about there is no one repository which talks about what are the fraud at an industry level. There has been, I mean to say again, very closed loop kind of programs running, like Hunter is one of them, which has been running for across 150 institutions, but that's not generally available, right? It's very expensive again, I think so, because so I mean to say, yeah, I agree with Sabya saying that we as a industry are not doing enough in terms of to really identify the fraud and share with each other. And that's the thing, I think so, which at a phase where we have close to 30-40 members, fintech members, where we have with the help of one of the bureau, we are setting up again, I think so, again, it's not industry level phenomena. Again, I think so we looked at very closed loop kind of things. They're saying that let's look at least fintech as a company, as an industry, and not as a banking as an industry. And we said let's create the similar kind of Hunter kind of similar program, right? Because fintech is one where a lot of us don't want to use Hunter because of many things, but then don't want to discuss on that. So that is one thing which we are doing. On the regulation side, I think so post having this Aadhar eKYC kind of KYC is allowed now to NBFCs, that should improve or reduce the chances of fraud. But then again, I think so one of the challenge is there, because still maybe probably 60 to 65% of the Indian population has only linked their mobile with Aadhar. I may be giving the numbers not right, but I think so.
Tier 2 maybe less,
yeah,
maybe less in
or maybe less, right? So that is another challenge which is there in this. I mean to say, that is one which will help. I mean, which is improving, and government is doing a lot of things to have the Aadhar linked with the mobile number, so most of the people can use the Aadhar or based on the OTP authentication to do a KYC. That reduces the risk of the identity theft, right? And the other regulations like account aggregator, which is a very excellent, I think so, from the government perspective, in terms of how rather than giving every time PDF documents or every time the physical documents, give the banks or the lending institutions the document in the digital way, so the chances of fraud reduces. So in overall, I think so we at a I mean to say overall industry level, we are getting into the right track, but is the pace right? I don't know, but maybe probably at industry level, we'll have to really see how do we take this to the next level faster than what otherwise it would take.
Yeah, absolutely. Valid point there. And actually, especially mentioned around the account aggregator framework, which has been now been approved by RBI. Right? So that's an interesting sort of phenomena, which I think would be good to sort of to solve one of the major aspects around fraud and credit risk, especially to serve those Indians who are financially sort of, I mean, they're starved, but there are no ways to sort of underwrite them properly. But this thing would be sort of helpful. But around that, I want to just highlight one more point, that when we talk about all this information account aggregator framework, data, and all of that, one major aspect around that is, I think, consent, right? So I think RBI has taken few of that, because especially I think last year, around 2021, there were a mushrooming of digital lending apps in India, which most of those were Chinese, and then RBI realized that they had been working there without a sort of a proper license, and they were giving loans to people and using different means of collections of these loans. So those were sort of taken rid of. So I think with data, it's very important also the consent factor on what data we are collecting. So maybe I'll take a perspective on that from Amrita. Like, when we collect data, so I mean, how important do you think is consent? Because in India, just Sabyasachi just mentioned that consent. The consent is something which is coming in only if there'll be awareness, right? If I just walk into any random store right now and somebody would ask me my Aadhar number, maybe I'll give, right? That's how we use that, right? So that's awareness is very important aspect of this thing. So how important do you think is that aspect, that we take consent and then only analyze data, and especially when current regime, when we don't have any personal data protection law in India, right? We might have it soon, but it was even discussed in Parliament but not been approved till now. So we might have it soon. So I mean, like today I'm taking X information. Tomorrow I might not be allowed to take that information to underwrite or understand the risk, right? So do you have any points to share there on that front?
Yeah. I mean, absolutely. I think I'd like to just touch upon something that Sabya brought up, and then what Vimal sir added on to, around how we, as an ecosystem, don't necessarily share the information that could help us become better as an ecosystem, right? I think conceptually, like even when I talk to others in the ecosystem, it's almost like fraud there's like a taboo surrounding fraud. And, it's actually detrimental to the industry, right? Like it would be fantastic if we can do like a report to use type of database, right, of fraud, which is how credit bureaus began in the first place. But I think we need to break the taboos first, right? And the taboo is multi-layered, because to the question that you just asked around customer consent, I think there is like a financial literacy or how can people use my data literacy aspect that I think as an ecosystem we need to get better for our customers, right? Like just because I have a checkbox in my flow which says like I'm going to take ABC, I don't know whether that means that customers actually internalize what that is, what is it being used for, do you really need this, right? Like that was also I think one of the primary challenges with the loan apps that weren't regulated that happened, the fiasco that happened last year, right? I think there's a consumer literacy aspect to it. There is a ecosystem, taboo breaking aspect to it. And I think at the same time, obviously, like we should all be, we're all working within a good regulatory framework from the RBI. And we should all stay in that box and figure out how collectively we can still solve this issue while making it work better, while the regulation might not be getting into that aspect yet. I think we can self-regulate in some of these, right? For which I think, some of the things that Vimal sir said that FACE is doing sound like promising steps.
Sure. Would love to hear your comments on that, Ashok, as well, on the point that Sabya talked about.
I mean, before let me step back a bit. Like if you look at fraudsters, right? All fraudsters have an identity. Like it's not like a fraudster does not have Aadhar card, right? So Aadhar card does very little to really solve the problem of fraud, right? Fraud is a lot. So I think one of the things that we have to, and it kind of coincides with I would say consent, is of late, especially in the last 6 months to 8 months, we've seen a lot of the credit bureaus are actually, there are loans which I don't know about, which somebody's taking on behalf of me, which basically means that you've not authenticated the consent either. Forget about whether consent you're taking or not. You have to be able to take consent from the right person. Just by putting a tick mark and say, I agree, doesn't mean you got consent, because I might not have given it. So I really think if you're thinking about fraud, which is, hey, as a company, is my loan at risk? I'm wondering about the 1.3 billion people who are potentially going to be defrauded because they're wrong. So people are taking loans in their name. So we really have to look at it as not individually as companies, but as are we helping people in general by creating a good consent framework, right? Consent framework is not just the I need to know what I'm giving consent to. There are 6 things, right to forget, right to this thing, but like, did I give it or not is the big thing, right? So I think at that level, if you look at pretty much every one of the authentication methods that we use, which is OTP based, or you can actually get my phone, if you have my phone, you're done, right? The OTP, you got it. Or like what Amrita was saying, if you do a social engineering, you'll literally get my OTP. So that doesn't mean anything. So I want to, if you're going to solve this problem of fraud, and I think the PD people needs to come out. It's been tabled. It's a brilliant bill. It's world class. It's top of but we're not getting agreement in the parliament for passing that bill. So there is a lot of these things which I feel in the next year it's going to be pretty exciting, because these things will come out and therefore protect individuals in the org. Having said that, I think RBI has been brilliant in the last 3 years in the way they have pushed digital regulations, be it video KYC, be it the CKYC framework, CERSAI, or account aggregator, which will obviously give speed to digital transactions. I think we are at the forefront of financial innovation in the world, right? UPI doesn't exist anywhere else. So I don't want to take away anything from what we have done, because as India, we're probably ahead of pretty much everyone in the world. But fraud is obviously going to be, I think we have a bit of work to be done there, because I do think there are not enough ways that we're protecting our people. I don't know if that's.
Yeah, I think UPI is something which is going across the world. Not only in India, in other countries as well now. So that's of course here to stay. So I think what I'll try to do is maybe take some concluding remarks from Sabya sir, and then take up some questions from the audience. We have a couple of questions. So any concluding remarks you want to make, Sabya sir?
Manish, I think all of us have put up brilliant points, but just to sum it up, if I have to say, I think as Ashok said, I think the year 2021 has been really the game changer for the fintech regulation in India. And I would call it the 3 significant policy shifts are the move away from the light touch regulatory approach. The second one that I can think of was the recognition that existing laws are not able to keep up with the disruptions caused by the technology in the fintech ecosystem. And the third one was the focus on protecting consumer data. And one of those route was the PDP bill, which is tabled, yet to be approved, but tabled. And the second one being the account aggregator, which is one of the things which is catching up to. Last week, you saw FM coming out and saying by 31st July, everyone has to comply. Brilliant stuff. Some of the licensing of payment aggregators, regulation of payments data, discussions around regulating crypto, the digital lending policies, the PPI, the card regulation, all of this that came out are all examples of this policy shift. So last 1 year has been exciting, challenging, forward-looking. Yes, in a short term, it causes a little bit of pain to all of us maybe, but it's in the interest of the consumer. And just to remind when, and we have been working closely with RBI since 2015 on the account aggregator, before even it was approved by the erstwhile governor on the last date of Mr. Raghuram Rajan. But anyways, if I remember my first meeting with them on this policy, and we were discussing, the deputy governor clearly reminded us that it is not for the benefit of the businesses. It is a citizens' charter. I hope everybody gets reminded of that. And it is with that interest that consent framework was created. And I hope it will be practiced in letter and spirit. And if that's done, I think some bit of problem. I don't think account aggregator can solve the entire fraud that happens in country, because most of the frauds that we spoke in the last half an hour was retail frauds, which is smaller part of the 67,000 crores of fraud that we saw last year. It is not contributed by retail, right? So there is much bigger which exists out of that. We are just forgetting the fraud, if I can name in the, I don't know, it's a public discussion, but the Nirav Modi, which PNB had to suffer, the consortium. The latest one which surpassed this year was SBI on ABG Shipyard, which was 22,000 crores. That was what, 14,000, this is 22,000. So if you deduct 67,000 crores minus 22,000, you see the quantum, just one fraud. So what we are talking is actually a lot small, but I think the attention is, the noise is today here, so the attention is here. It's the flavor of the season. So maybe we'll all have to talk about it. But the point is, there is much, much larger frauds, which if we can control as a country, will save much for the nation than just retail. So though this is a burning issue, of course, we should focus on it. We should create awareness, but I would still leave it with everybody's thought that nation is losing much bigger money on a larger fraud that happens on the corporate wholesale banking side.
Absolutely. I think with that number is not, in front of this is, this number is, of course, in front of that is minuscule. So we don't really want to talk about it. But yes, focus of the discussion today is the details. So I'll stick to that. And with that, I'd like to...
Manish, just to tell everyone the scale. It was 115 crores of fraud that we saw on cards as against 67,000 crores. So you can calculate the percentage. I'll leave it with that.
Absolutely. I totally agree with you on that. And I think in today's discussion, we mostly talked about, since we are talking more about asset products, it's more of the risk to the fintech rather than the risk to the customer, because there is a larger risk to the customer as well, which I think Ashok touched upon, where, the information, like the customer who's the end one who's using the particular financial product gets defrauded, his documents get misused and all of that. We didn't talk about much about that, but yes, we focus more on the fintech facing the fraud rather than the customer, because there are other aspects which we can also look at where we can protect this customer as well from getting defrauded. I think with that, I think I'd like to take, we have some questions, but I'd like to take a couple of questions before we sort of conclude. The first question which comes in from the audience is that, I don't know whether Amrita, you want to take this, or maybe Vimal sir. So what would you say is the biggest challenge in risk assessment for onboarding new to credit customers for lending companies? Like basically NTC customer, what do you sort of look at? I think one or two points which you already mentioned, Amrita, maybe if you want to add on, and then Vimal sir, if you want to just add a point there.
Yeah, absolutely. So I think that's a really great question. I think with new to credit customers, there are a couple of things that we at Axio do, right? Like one is, like I mentioned earlier, because we integrate with merchants, we have some co-created scores that allow us, even if the customers are not present on the bureau, to underwrite based on the customer's behavior on the merchant, right? So that gives us one perspective. The other philosophy that we follow is that we essentially start off new to credit customers with lower lines, and then we grow them over time as we see their repayment behavior, right? Like just philosophically, we're also saying like, hey, we want to make sure you can actually handle repayment of credit and a credit facility, right? Like before we extend more to you. So those are the two large ones.
Vimal sir, you want to? Thanks, Amrita. Vimal sir, you want to add there?
No, I think so. These are the 2 points which I had. One is that start small. Basically, see, first of all, new to credit does not know many times how to behave the credit. How once he has got the credit, how do I behave so that I can build my credit history over a period of time. So many times it is more about the educating him, saying that if you repay, you will have a good credit score, which will help you over a period of time. And that's one. Second is, onto the how do I say that whether he earns money, whether he has the repayment capability. For that, I think so. One is, the more behavioral data, or about whether he's working somewhere, whether so some kind of data points onto the employment may help in terms of whether he's employed, not employed, all of that. Yeah.
Manish, if I can add a few points here. So first is, for any kind of building a strong, good book, is the fundamental is check the cash flow of a person, right? Whatever that, so bureau came much later, right? Before that also lending business existed, right? And what was the basis fundamental? It is the cash flow. So the first attempt that any lender should make is to try and figure out the cash flow. If an cash flow is not visible directly from the sources that you are supposed to trace a cash flow, then you need to figure out an alternate or a substitute of a cash flow. So when we talk of alternate data, we can't make it generic. Like Amrita said, merchant. From merchant also, you are trying to derive an alternate cash flow itself, right? So the point is, ultimately, if you are able to derive the cash flow with the highest mark of accuracy, is where you will be able to make a better underwriting decision. That's the only point I think which should hold us good here. And in any ways, if you can derive that, it's good. Because what we are saying is new NTC is nothing but that you are not able to judge the repayment behavior of that person, of that individual or that entity. Doesn't mean he is not a good to be lend person, right? So you will have to take a call basis the cash flow that he has maintained, right? And go ahead and take that call. Somebody has to take a call. So it's of course the combination of risk appetite and the cash flow of that individual or an entity that you are wanting to go ahead and lend. So this is the first point. Also, because the challenge of getting a data will be solved partially by the account aggregator is an assumption that we all are making today. But an interesting point, because this discussion is on fraud and credit loss, we should be prepared as an industry to see a new type of fraud, which is well planned and syndicated. So the point is, what you are thrashing out from the account aggregator is the data will be made available from the source. Fantastic. So customer cannot make a fraud because you'll get it from the bank systems. Very good. But if a customer has to fraud, as Ashok made a point, he will make a history of 2 years. Fantastic. You get it from the CBS systems. Fantastic. No fraud. But what about the intention which he carried out for last 6 months or 12 months for the period? Now the fraudsters know the lending policy better than the lenders, maybe, right? That's what I see most of the times. So they would plan it. So we need to be coming out with better models to track behavioral frauds and the propensity and see what can be done. I think these two are something which is very critical. We all need to keep it in mind.
Sabya, I would like to top up on that last point you made. We actually authenticate companies also, and we found there are about 63,000 companies in this country today, which are in the business of giving fake employment and certificates as well as fake employment submissions. So what happens here, and we know this because we have the data, is this company person goes in and he says, hey, cool, I need a history of employment for 10 months. He pays the company, let's say 10 lakhs. For the next 10 months, he gets his salary credited 80,000 rupees every month. And then he tops it up with that 1 lakh to the company saying, hey, this is for your benefit. Now, what happens here as a trend line is these companies, directors of these companies, once they're caught, they create another company. So you can actually see trend lines, not just on the same DIN number across 150, 200,000 companies. You'll see them in the same address. You might see them with a bunch of patterns on MCA data. Now, your credit models in banks are not designed to handle this, right? Today, and you don't know which are these companies, right? So, by the way, there's 63,000 of them that we know of.
Yeah, I think it's pretty interesting.
Wow, that's like a crazy statistic. Thank you for sharing, Ashok.
I think it's almost time. So I'd like to just make one concluding statement. Right, I just want to maybe touch upon the point which Amrita was making, that when the repayment behavior cannot be tracked, or you cannot look at the generic piece of information to understand the risk. Possibly, it's best to look at the alternate piece of information, alternate data which is available, right? And I think it's always more data. I mean, more the merrier, right? The more piece of information you have, the more data you have to crunch, is better it is. And I always believe that the models can be fed with all of these alternate data, which is interesting for the, of course, interesting and valuable as well for maybe a lenders to understand the customer's risk, and then very carefully go ahead and lend. And then when we look at the repayment behavior and the information comes in, and then you can, of course, start to increase the credit line and other things. I think with that, I'd like to conclude. I think it's already time. So I'd like to I'd say thanks to everyone for being part of this particular event. And it was a very eventful discussion. And then I, in fact, learned a lot, which I think about, which I didn't know today. And I guess the same with everyone. And I'd like to hand it over to the IFF from here on.
Okay, so with that, we come to the end of this amazing session. I thank all our speakers, Mr. Sabyasachi Goswami, Ms. Amrita Sharma, Mr. Ashok Hariharan, Mr. Mikhail Marchenko, Mr. Vimal Saboo, and Mr. Manish Thakwani for your insights and for making this entire session so interesting and engaging. I would also like to thank all our online attendees for their time. Last but not the least, I would like to thank JuicyScore for supporting this webinar. Going forward, if you wish to host a webinar with us or just say hi, please drop us an email at info@indiafintech.com. And with that, have a great weekend. Thank you.
Thank you so much.
Thank you.
Thank you so much.
Thank you so much. Bye-bye.